Carla.
Sure. Carla Zenz, and I created ZipCup. It's a collapsible travel mug. It's not directly tech related, but I was running an Indiegogo campaign when I was approached to participate, and look forward to sharing a little bit of the information about my funding journey, which is combining investment and looking at loans, and I've also obviously done crowdfunding.
Great. Randy Williams, proud member of Credits Forum, founder and CEO also, and we're fortunate. In fact, I just got back from Turkey, our 25th chapter worldwide, and the world's flat. We're investing all around the world, and the reason I bring this up because we're trying to create a bridge of resources and capital for all of you. Last year in Northern California, had 37 fundings. Right now, we're up to 21 this year, so probably about the same amount, but also for ones that do in beta stage, we have other verticals, whether it be Jumpstart Days, we launched that 16 months ago, which is mentoring, and free resources for you. We also have Head of the Fashion Nexus between technology and fashion, and Eureka. And these are all programs to help you, obviously, a good next step and get funding.
Hey guys, my name is Paul Singh. I'm with a firm called 500 Startups, and we are pretty new. We're about 2 years old. We've been investing for out of 2 funds now. We're about 400 companies in about 20 different countries now. Interesting stat for us is that about 25% of our investments are actually in women founders. We'd love it to be more, so that's actually one of the reasons we're here. And it was interesting, one of the things you just said there, one of our kind of guiding themes is we see ourselves as sort of an API of venture capital, functional expertise all over. So super excited to be here.
Good evening. Super excited to be here at Yelp. Hope we get 5 stars, guys. Counting on you on the Yelp ratings. My name is Megan Quinn. I'm going to apologize up front. I just crossed the 103 temperature degree threshold, so I'm not feeling great out of time. All right. He already asked me for a pro rata if I get him sick on whatever my next deal is. So, sorry. So I'm Megan. I'm a partner at Kleiner Perkins. I have been at Kleiner Perkins for all of 2 months. Previously, I was the head of product at Square across hardware and software. And before that, I was at Google for about 7 some years. Before that, I dropped out of a college institution down south called Stanford. But I hope we're able to be valuable here today, and do consider the 5 stars.
All right, so I will kick it off, and then please interrupt with any questions. So actually, I'm going to start with Paul. And I'm actually going to ask you the same question that I get asked from all of my limited partners, which is, why does the world need another venture capital firm? And tell us a little bit about, how you guys approach it and what you're seeing out there, and and particularly as you think about this audience, what are the things that entrepreneurs should think about as they look for and talk to venture capital firms for funding?
Yeah. Well, I think did everybody hear that question?
No, sorry.
Because I wasn't going to repeat that.
I'm not sure I can say it as many the second time around, but I'll try. Anyways, what I was saying to Paul, I'm going to ask him the question that I always get asked from our investors, which is, why does the world need another venture capital firm? And so we'd love to hear about, particularly from 500 Starts, what they're doing, and then in particular, as those of you who are entrepreneurs in the community are thinking about getting fundraising, what should they think about as they think about approaching venture capitalists or other potential financing sources?
Before I say anything, how many of you have raised money before? Either for what you're working on now or something in the past? It's like some sheepish hands. If you raise money, you can't raise your hand.
You can be proud of it.
Yeah, you should be proud of it. So I think the fact of the matter is that early stage capital is getting commoditized, right? So there's smaller funds like 500 Startups. You've got, in the US, you've got crowdfunding coming. In places like Singapore, you've got the NRF grants. In Canada, you've got SHRED grants. Chile's got their Startup Chile thing. The fact is that if you really want to raise money, you can, right? And for those of you that haven't raised money or might be having trouble finding money, I know that might be hard to believe. I think the thing is the world doesn't necessarily need another venture capitalist. I think the world actually needs more smart money, right? So when you guys are raising money, you should be thinking about what value add that investor can provide. And I realize that's probably something that you all know and probably hear all the time. But one of the things that we ask our founders is, why do you actually want to raise money from us? And for those of you that know anything about 500, you'll find that it's actually pretty hard to raise money from us. We don't want it to be that way, but just given the volume, it's hard to keep up. But, and all of our initial checks are small, right? So the interesting side effect that has, maybe side effect's not the right word, is that the people that actually do kind of deal with us, get through that process, they're not in it for the money. They're actually in it because they want either data, design, or distribution help. Right? That's particularly the reason why they come to us. And I think when you go to Andreessen, you've got more, you guys have a lot of HR help, and you've got a huge team, like 60 people on the back end or something, doing stuff on the HR side and just operations at Singh. So like that's certainly not what we can do, but they hopefully can't do what we can do. In any case, it's all about smart money. That's the key thing you guys should be thinking about. Always ask your investor what they can bring to the table for you, and don't be shy about it. Ask around for references before you raise money from anybody.
So, Randy, you've been doing angel investing for a long time. I think you said 13 years when we were talking out in the hall there. Tell me a little bit about kind of what have you seen that's changed in the angel or early stage financing environment over that time period, and again, what is the implication of that for people who are raising money to now versus what it may have looked like 5, 10, 13 years ago? One word: revenue.
Our validator is revenue, and so we have other verticals for you to come to if you're in beta stage and you have a great dream or idea. But what we're funding is companies that aren't freemium anymore. We're funding companies with revenue, and that's obviously what we look for, and that's what we can check out in the marketplace. And so, again, great sage comments, but we like funding companies with capital, but also resources. So we love the whole ecosystem of capital, whether it's crowdsourcing, whether it's Tier 1 VCs, Andreessen, but we want that capital to be out there for you. But again, that strategic money is very important. Has anybody been in Keirestu Forum in the room? And you probably heard me say over and over, please ask for resources. Please ask for strategic relationships, not just here, but if you're looking for customers in Istanbul or in China, we have a giving community. We have, in fact, no solicitation policy. You ask and hopefully you will receive. We can't promise you capital, but hopefully there's capital there, but we certainly can give resources.
All right, let me stay on the VC theme, and then we're going to go to different themes. So, Megan, I'm going to come back to you, and we better give her a microphone since she's speech impaired. So, Megan, obviously, as you mentioned, you've been at Kleiner for a relatively short period of time, but give us some sense of, as you're meeting with companies, particularly since you came out of a company like Square, which is tremendously successful and obviously raised a ton of money. What are you seeing out there as you look at companies? What are the kind of some of the pitfalls or mistakes that you see from some of the folks who come in to pitch you that would help orient this community?
Sure. There's really 5 things that I'll focus on, and they're going to sound very foundational and fundamental, but it looked like there wasn't a ton of the crew here that's raised money, and also as my 6th grade math teacher would say, you can't get the fundamentals too right. So there's really, starting off first, you need to have a vision for the future that commands that your product or service exists, and I really can't underline this too much. You need to be attacking a market that is huge, and you need to be able to articulate that market to whichever venture capitalist firm, angel, et cetera, that you're talking to. And you really need to have that vision of the future where your product or service exists. Second, the product or service really needs to be innovative and not iterative, and you need to be able to explain how that's the case. I candidly see a lot of folks that come in with products that are very, very slight iterations on products that exist today. And I'm always a little bit suspicious if I immediately understand the product or service. That being said, it does need to feel inevitable, but I also need to understand what new insight or what new technology makes this product or service exist today that it couldn't have 5 or 10 years ago. The third piece, and again, these aren't in any rank order, but really is around the team. You need to have the best team that you can possibly find. Always work with the best people that you can find. And if that's a very, very early stage seed conversation and that's just you, that's great. But then I want to hear about how you're thinking about attracting talent, because you're only as good as the team that you can build. Fourth, this is actually one of the biggest mistakes I see, is entrepreneurs don't tend to think very much, at least in my very limited experience, about the types of investors that they want to bring on board. They want to raise money. It feels urgent. It feels like something you need to do. You know all the names. You have all the emails. You just want to reach out to everybody. But the reality is that investors specialize in different types of companies, different stages of companies, and you really need to think about investors as employees you can't fire. And that's what I would encourage you to do, is to do lots of research about who it is that can help your company grow, because I guarantee the hardest part about building a meaningful company isn't raising the money, it's actually building the company after the fact. So think really, really carefully about that. And then fifth and finally is really around valuation. You definitely want to optimize for price. And you want to make sure that you are getting enough money that's going to give your company and your team the runway they need to change the world. But at the same time, I often see people fall into the trap of looking for the largest valuation. And really, my guidance is think carefully about how much money you need and why. And I will always ask entrepreneurs who I'm talking with, why is it that you need this capital? How are you going to deploy it? Because inevitably, if you raise too much money, and there is such thing, it limits your options.
Great. All right. Anybody have question on this topic before we move to a different discussion or slightly different discussion? Okay. Nobody? Okay. So Carla. Do we have any? Oh, great.
What is sorry. So what is like the right time to go in for an investment meeting? You know, go in with the idea, and you know you've launched in beta, you have a little bit of traction. Should you wait? Because when is the right time? When do you want to hear from entrepreneurs?
Sure.
Yeah. So I think the fact of the matter is, well, let me actually ask a question. I might shoot myself in the foot here. How many people think that ideas get funded still?
What?
Like, how many people think that an idea is enough to get funded?
Depends.
No, so I think at 500, I think, it's funny, one of the most common misunderstandings about us, and I think by extension many early stage investors, angels included, I think, is that we'll fund ideas. And that may have been true in the past, but I think one of the things that people have to understand now is that as the web gets bigger, the world's getting smaller. So you've got more and more startups coming online in places like India and Brazil and Germany and all these other places, right? And what that's really doing is pushing the bar up now for early stage. I would just say anecdotally for us, 95% or more of our companies have some prototype but meaningful, small but meaningful usage before we actually fund them. And the small amount of companies that we do fund that have some sort of pass is because they did something significant in the past. So the fact is, I think the bar is rising for all founders now.
And the slight comment that I would add to that, especially being a product person, love prototypes. If you can give them to me, that's great. That's how I think. Not everyone is the same way. You get more leverage as an entrepreneur the further down the line you are with your product and company. That is the reality. The more traction you can get, the more users, the more engagement, the more mature the product is, the more leverage you have in those conversations. So I tend to say, you don't want to be eating styrofoam and brown boxes or anything like that. You definitely need to eat and feed your people, etc. But you want to wait as long as possible to raise money so that you can have more proof points that your idea is really, really valid and you're onto something.
Yeah, I had a really tough question asked for our launch in Istanbul last week, and there's about 300 people there interested, obviously, in angel space and creating a bridge, obviously, see deal flow around the world, and also invest in Istanbul. But I took a panel, I took some of our portfolio companies, and I took some of our esteemed members that wanted to go there and share advice and give of themselves. But there was a question from the audience that, gee, you sign NDA, and I'm afraid to share this idea. I'm really afraid, that it'll get copied or replicated. And fortunately, I didn't get the question, or didn't address it, because I would answer just like yourself. But one of my portfolio companies called Safara, which is just finished raising a $5 million round with us, and they're solving MRSA issues for TB patients. And he said, his name is Rob Neville, CEO of Safara, he said, an idea is worth $1. So get over it, and friend or foe, find your strategic link. Obviously find, where ecosystem capital is going to lead you toward, hopefully, an exit, and don't think too much about exit, Don't think about IPO. Think about friend or foe. Look toward who's the relationships to grow your company. Whether you need to associate with a telco or if you need to associate with a healthcare company. But you need to garner relationships, and I applaud you all being here because that's what you're doing. You're accessing relationships, hopefully a future of your company. So yeah, there's millions of ideas out there.
So Carla, maybe you can comment on this since you've actually had real world experience as an entrepreneur raising capital. Kind of, when did you think about it, and also you've kind of explored different sources of financing as well that might be interesting to talk about.
Absolutely, and everything that, I'm not at the level of approaching my co-panelists yet, but everything that they say is resonating with us, what I'm getting. I work with a mentor who's an angel investor, which is fantastic. But one of the things I'll touch on that's real world is my experience with crowdfunding, and it resonates to the point that I want to take this idea that I have, this prototype, this concept, as far as I can without asking for money. And so what I did, my first stage was after getting the product designed, was entering a design competition and getting some validation. And once I finished in the top 5, then I approached crowdfunding, and that was another way to get people to decide, okay, are users of this product going to plunk down some money? And the value I got from crowdfunding was less about the money and more about the feedback and the questions, because I had misconceptions about, because I'm so caught up in the product, I had misconceptions about what people would believe about it, and they had questions that I thought were silly because I'm so caught up in it, but I realized I had to address them. And if I hadn't done crowdfunding, I would have made big mistakes in my packaging, and as an independent person creating this product, I can't afford to make big mistakes. So crowdfunding was a way to avoid making big mistakes. The other thing that it opened me up to, which I'm still exploring, is the concept of smart money, an investor who came from the coffee background and can actually give me a lot more than just sort of walking down the street looking for some money. I'm not worried about that, but I do really appreciate what he might be able to offer me. So, in short,
Can you talk a little bit about how much money did you get when you did the crowdfunding, and kind of what was that process? How long did it take? And when exactly was that? Because as some of you guys may know, there's been some changes in the laws around crowdfunding, which presumably should make it easier.
Sure. I raised $10,000 this summer, so I have 500 pre-orders for my product. It's a collapsible coffee cup. But I'm talking to micro lenders in the Bay Area. That was attractive to them. To me, I thought, okay, it's 500 pre-orders, but to them, it was an added benefit, and I hadn't stretched my credit. So I'm still looking at some of those micro lenders. I have a great list, and to echo the points made on the panel, we ask people for resources afterwards. I've got the list of everyone who's available if you're in a very early stage that I've considered, and I'm happy to share that information.
Good. Question, yeah.
Yeah, what kind of companies should take VC or angel money versus going a crowdfunding route? And is it an obvious breakdown between software on VC route or like hardware / physical products and crowdfunding, or not?
Well, coming from Square, I guarantee we took VC money. So, I actually think that line is blurring more and more every day. And I think that's a good thing. I don't think it's a bad thing. I think it's a really interesting change. And I don't think you can break it down via software or hardware at this point. So that's how I answer that. I certainly don't think that there's a hard line there.
What about like technology products and like non-technology products?
Yeah, I would add one thing. I agree with everything Megan said. I agree that it's not, I think it's more about how much money do you need, and then ultimately, is this a VC financeable business? So I think, Megan, you mentioned, one of the reasons why they turn down a lot of deals at a firm like Kleiner is the market size that somebody's going after is just not big enough. And that sounds like mother adapted pie, and we live in a world, unfortunately on the VC side, where 90% or some significant portion of the investments we make aren't going to be worth nothing. And so if the outcomes for the successful ones aren't off the charts, it's very hard to make our business model work. So I think as you think about VC versus other stuff, some of it is, how much money do you need? And then, is this a kind of business that lends itself more towards VC financing, which tends to be something that, at least at the time you conceive of it, you can think of it as a standalone business opportunity that can ultimately return those types of returns that a VC ultimately is looking for.
And conversely, in the angel space, you really need to garner someone who has and can empathize or understand, obviously, your business, and find a champion that can, hopefully navigate the space, whether it be angel space, whether it be the VC or crowdfunding. Again, what I said earlier, we just love the whole ecosystem of capital and resources to help these companies grow. But in the angel space, you need to come to us. Yes, you have to have something very special, and conversely, as I said earlier, revenue. But you also have to find that champion. And also, it's very important for you to share your weaknesses. Gee, I just need this resource, or I need that. It's powerful it's really great to see a self-effacing entrepreneur, need help. And we want to help you, and that's important. I think everybody on the panel wants to help you. But, the old Jerry Maguire line, help me, or help you, help me, help you. No, how's it go?
Help me, help you.
Good, I'm glad you're engaged. So yes, but we need to know how to help you, so you have to tell us how.
I think the last thing I'd add just there is, I don't think of it as an either or. Think of it more like an ecosystem, like a hierarchy almost, where it's almost like if you, some of them just make a very general statement. I think in general, angels / friends and family tend to feed into kind of groups like ours, and then we end up feeding kind of into larger firms like them. So it just depends on like where you can get on the train, right? Like so, you're able to get on. Looks like you're using the money probably to finance the build out of this first, yeah. But for a tech startup, they shouldn't raise 10K. They probably, for general tech startup, they probably should be able to build a prototype before they raise anything. And I'd say for me, like a flag or red flag is if they don't raise, $250,000 on their first raise, something like that.
And that's a validator. That capital is a validator to us. So that capital should be in the door, whether friend and family or for yourself. And so that skin in the game is critical when we look at opportunities.
Yep. All right, all the way back there.
Hi, can you, so a lot of major companies like Intel and AT&T and companies of that nature have slashed their R&D budgets in the last 20 years. Major R&D is really done by the startup community these days. So I'm curious what the technical appetite for venture capitalists is now. If somebody came to you and said, I'm going to reinvent Ethernet, but it's going to cost $50 million. Is that something that's interesting, or is that
you?
$50 million, they turn it over to me.
Yeah.
I'll take that as a good sign.
Yourself.
Yeah. Okay.
We like to see entrepreneurs who are solving really, really big problems. We also like to see those entrepreneurs who are solving problems that are eventually going to make them money and then not us money. But Kleiner, just to take one step back, actually has 3 different divisions, right? We invest in the internet, we invest in life sciences, and we invest in green tech. Those all operate on more or less very, very different life cycles. So I would say that probably more than at least my neighbors right here, we're looking at things where the work is very over an extended period of time, where it's very high beta, but where we think that there's an enormous problem to be solved.
Yeah, I would say the same thing. So I think it's less, again, I think big problems is fantastic. I think the question, though, particularly as it relates to, if you mention a company like an Intel or something, is are you building a product or are you building something that actually can become a company, right? And if it's a product and it looks like at the end of the day this is likely to get acquired by an Intel or something, it may turn out to be a great outcome, but at least, certainly as we think about things, if going into it we think really there's no way this could be a freestanding company, that the only outcome is an acquisition for a product, it's less interesting, again, just because of the fundamental dynamics of the math that we're trying to do in the venture business. Good.
I feel like I'm just saying something for every question. You should just
That's
stop.
okay.
But one of the, I think, we're kind of in this, I think we're kind of like this abnormality. Firms like ours didn't exist 2 or 3 years ago, but one of the macro things that we're seeing is these firms are cutting their own R&D budget. And then more recently, some of them tried to create their own incubators. And I think actually what you're going to see now is they're realizing if those incubators can't actually get the deal flow that they thought they could. So now they're becoming LPs in funds like ours and others. And I think one of the most aggressive ones in this space right now is Walmart Labs. That's here in San Bruno anyway, and down in Mountain View. But you're seeing more and more. We've seen Disney try to do this. You've got telecoms out in APAC and MENA that are doing this now. So I think the key is, can you build something, just start with the prototype. You don't necessarily need to raise $5 million to start with. But there's definitely hope there. I think that market's trying to figure itself out now.
And we love strategic money at the table with us. So 5% of our members are corporate, and AT&T is a member, and Intel's a member of Keirestu. And so why are they using us? We want to be used. They want to see the engine and deal flow. They want to see great products like you have. So come to us, and we'll then segue and introduce you back to Intel's capital, and or AT&T. In fact, past CEO of AT&T is a member of Keirestu. So we want everybody at the table, from corporate, obviously the VCs at the table with us, and obviously we have 1,000 members. The difference in us between VCs, OPM, other people's money, this is our money. So we'll make bets with you, and your typical investment locally is about anywhere from $500,000 to $1.5 million. But one thing interesting about our network is last year, over 40% of the companies got funded here in Northern California traveled to our network, not only just for capital, but for resources too. We've now done 110 transactions through companies funding between our Northwest kindred spirit, our Microsoft retirees up there, and our Northern California. So I wanted to change the paradigm of angel investing 12, 13 years ago and say, it's not local anymore. Historically, you drive an hour. That's what an angel investor would do. Now we want to see deal flow around the world, and everybody wants to take a glimpse back to you in Silicon Valley. They want to see You know, getting back to Istanbul, I was also in Beijing last week. In Beijing, they want to see our deal flow. So bring it on.
All right, other questions?
And you're left.
Is there one back there? Okay,
Question.
sorry, go ahead, yeah.
So hardware is pretty hot this year, but I hear stories from some of these companies who have built prototypes that it's still hard to raise money. One in particular, they have a prototype, it's a kitchen appliance for high-end chefs. They've raised over $500,000 on Kickstarter, but they're finding it really hard to raise another $500,000 or $1 million in terms of VCs. They meet with a lot of them. So what would you say for a company like that?
I'll talk about it. So again, this is I'll hazard a guess since obviously I only know a 10-second description of the company. I think the thing, if I was guessing why VC might not be the traditional route, is I think people may look at it and say, phenomenally interesting product, but is there a company behind the product, right? And so it may be that they have a whole line of things that make sense to kind of build into a company. But as a standalone product, I think unfortunately for traditional VCs, that's going to be a very hard thing to fund, just because again, the ultimate outcome probably for a company like that is it gets sold to some other principal company, which again may be a fine outcome, but doesn't at least kind of give you the ability going in to see this as a pure standalone business. So I think alternative funding sources may turn out to be a better avenue for something like that.
And I'll reiterate what you said again, it's about the size of the market.
Yep.
I mean, at the venture level. We recently actually co-led an investment with Andreessen Horowitz in Quirky, and Quirky, from my perspective personally, is taking on OXO, they're taking on Rubbermaid, they're taking on Procter & Gamble. So it's not that, oh, we're not interested in the kitchen, or we're not interested in hardware that has to do with the home or the professional chef, but it's really about Quirky's looking at the entire ecosystem of democratizing invention, and how big is the market of whatever the company you're referring to is sort of in that level of comparison. And I don't know, but that would be my guess.
I think just, again, the thing I would add to every question would be, so this one I think is really interesting, because we hear this from founders, even in like technical, like internet startups, where they'll say, well, I built this prototype, but how come I'm not getting funded? And I think particularly one of the things that you guys should understand, just as a quick side note, if you haven't actually read about like venture economics, what you may want to do is go to something like venturehacks.com and go to the archives and read about kind of how it works. Because angels are not VCs, right? They're investing their own money, we're investing other people's money. So going back to your question though, often when I hear founders say that, what I end up saying to them is like, look, I have a fiduciary duty to invest in companies that are reasonable. And I'm trying to, when I sit down, I think I can speak for you guys as well. When you sit down, you're trying to find the business in there somewhere. And I think what founders ought to do, and I don't know if this will work for the hardware space because we don't know that space that well, but one of the things I tell founders is that you want to probably get on something like AngelList and look at the tag, the category that you would probably fall into, and then sort the list of startups by the number of introductions they got, and look at the pitches. Right? Look at the pitches because that's actually what you're up against. The fact of the matter is that we want to write checks, right? And the question that founders should be asking themselves is what are they not saying, or what are they saying that might be wrong, and that sort of thing. So, but we want to be writing checks. You should just look at the ecosystem that you're up against.